Thank you very much. So good morning, good evening, good afternoon, wherever you are in the world. Very pleased to have everyone here. My name is André Bigazzi. I have the pleasure and the honor of being the coordinator of PrivacyRules, Global Alliance of privacy and cybersecurity experts ready to serve all your companies. You might not want to admit that, but certainly you have privacy compliance problems from the legal perspective and cybersecurity concerns as well. So this is who we are. We are here to serve you. I want to thank first and foremost Ivan and all the organizers of the Digital Week Online, this fantastic event that luckily we have been partner community of since last year. PALcapital, here represented by the CEO, who's the host of this day, and everyone not only here in the panel speaking with us, but also in the audience. I immediately pass the word to Kevin Warburton, because he's the moderator of today, and he will introduce our panelists today. I don't want to take much of your time. So Kevin, thank you very much for being there. And let's start this very interesting conversation.
Thanks very much, Andrea. And hi, everyone. Thanks very much for letting us be part of Digital Week Online, and in particular today. Good evening. I'm in Hong Kong. It's not the bright sunny day you see behind me. It's actually quite late at night, but we hope very excited to be here nevertheless. So what we're going to talk to you about today is the explosion that we've seen in the cryptocurrency markets, but in particular including the use of Bitcoin and other cryptocurrencies in the context of ransomware incidents and investigations. So I'll be moderating this discussion for the next hour or so. I'm a partner at the Hong Kong law firm Tanner de Witt, and we're a member of the PrivacyRules Alliance that Andrea has just talked about. So I, do quite a lot of privacy work, but my focus generally in the contentious situations, so in arbitration, litigation, and the context of investigations. But you'll be pleased to know there is a lot of expert knowledge on this panel as well today. So we've got Francis Chan with us, who's a senior analyst at Bloomberg Intelligence. He's going to talk to us a bit about the Hong Kong Bitcoin market and the e-yuan. As you can see on the screen, we've got James Haft with us, who's the CEO and founder at PALcapital, who are the co-host of today's Innovation Tech Day at the Digital Week Online. He's going to give us his unique perspective based on his experience working with innovative startups around the world. We've got the great Luke Stokes with us. You can see he's the managing director at FIO, which is the Foundation for Interwallet Operability, and he's going to talk about leveling up for cryptocurrency mass adoption. And he's going to tell us all that it's going to be here sooner than we think. So listen to his wise words. And then last but certainly by no means least, we've got André Sollner with us, who is the global CFO and head of corporate governance at the wizlynxgroup, another member of the PrivacyRules Alliance. And he's a leading cybersecurity expert. And he's going to talk to us a bit about the use of Bitcoin and other cryptocurrencies in the context of ransomware investigations. So let's kick off, and just a bit of housekeeping. There'll be time for discussion, hopefully towards the end, and we can take questions in the networking rooms or on the platform at the end. We'll try and bash through as much as we can with the panelists now. We've got a lot to get through. So we'll kick off, I think, James, you're co-host of the day today. You're a busy man. We're pleased that you could squeeze in this session as well. So, I think a lot of people in our audience today are innovators. They're all over this, and I'm sure they're eager to hear from you, being a leading banking and investment funds expert. Talking at a general level, are Bitcoin and the other cryptocurrencies, are they the new El Dorado? Is this the great opportunity in the road to riches?
It's interesting. I think I just gave a keynote which talked about decentralization, and so I look at Bitcoin and the tokens, and these are the first wave of examples of how decentralization and open sharing of ideas and the intelligence of the crowd are going to wash over, hopefully, humanity, at large. So, I think that Bitcoin is great and is a fantastic introduction, to depoliticized money and the ability to communicate your interests economically without without the direct intervention of governments. We'll say governments are going to find a way to be involved, of course. But what really is exciting is the distributed ledger that sits under Bitcoin, and that Bitcoin is the first, great example of. In a distributed ledger, you're able to share information globally, quickly, securely, in ways that people can benefit from each other's activities and intelligence, but create protected environments to be able to have your own business within that larger community. And so the ability to form large communities and reach them quickly and onboard them and have them become habitual users of your platform is a huge advantage of the distributed ledger that I think is going to accelerate economic, political, social change globally. And I think that's what we're starting to see.
Yeah, definitely. And I couldn't agree more. And actually, and do we have, I kind of wanted to throw to Francis, but just thinking, do we have Francis here with us?
We exchange email. He's trying to get access, so he should arrive quite soon.
Okay, well let's leave Francis for now. But Luke, let's come to you. I mean, you've been involved in the crypto world for a long time. Fair to say you're a bit of a pioneer. So after seeing its growth, from the inside and up close and personal, what sort of role does usability and cybersecurity play in a world of self-sovereign Bitcoin value? Do we need to level up?
Yes, I think we do, actually. Yeah, as you said, I've been in this space for more than 8 years now. I think my first Bitcoin purchase, I spent $50 and I got 2.5 Bitcoin. And so I've been watching this evolve and grow over time. And I was too early because I didn't understand the mathematical network effects involved. But as I look at it today, I really do think there's an important need to level up. In the early internet adoption, a lot of people thought it was too hard. They were literally having their secretaries print out their emails and bring them to them as paper copies because internet was too hard. And I think we have a little bit of that today with the digital currencies and this digital online space. But I also think it's really important. It's kind of just as you can't run a business today unless you're connected to the internet. You can't be part of the future digital e-commerce and financial world unless you understand how to be safe online. And that includes, the latest security updates for your operating system, using a good password manager, not downloading stuff and installing it when you don't know what it is. These different kind of good online practices, I think, are incredibly important, especially when it comes to digital currency. Now, that said, I also agree digital currency is just too difficult. It's extremely difficult to use. I'm a technologist myself, and just this past week, I made a mistake that could have cost me $1,100 withdrawing to the wrong account. And this is something that thankfully I was able to contact the person who owned that account, and they were a good actor and they sent it back to me. But this is something that, I've been in the space for a long time, and these type of challenges shouldn't still be here. And that's what we're working on with the field protocol. Instead of long, crazy addresses, you can have human readable addresses like Luke at Stokes, and you can confidently interact with people in a way that's similar to the PayPal and Venmo centralized experiences that people have come to find and expect and are comfortable with. So I think that's a big part of what we need to do. This mass adoption is coming. It's going to happen quicker than people realize. We don't have mechanisms in our brain to recognize exponential growth. So when it happens, it's something that catches us off guard. We've seen it again and again and again with network adoption of technologies. So I think in the next 3 to 4 years, it's going to surprise a lot of people. And so we have to be ready for those normal everyday users, not the innovators, the 2.5% we have now, but the 12.5% of early adopters who expect a much better experience.
Yeah, it's interesting you say that. Particularly, I would, you look at you as an expert, and you say you had an incident last week. It's clearly something that everyone needs to be aware of, because this is.
It was sincerely embarrassing. I mean, I've never made it in 8 years. This is probably the first mistake I've made like this, and I'm just like, oh gosh, I can't believe it. I used a deposit or withdraw address that I had used in 2017. And so I didn't have it in my records who owned it either. So it was quite a mess. At least I got to blog about it and tell the story, but it's quite embarrassing.
Yeah, this is one of the reasons why I was quite keen to be involved in this panel, because I come at this from a much less well-educated stance. So this is I can't decide if this is comforting or alarming to hear, but I'm sure we'll by the end
we're going to fix it. We're going to make it easier.
Oh, exactly, and you can tell us all about why. So let's bring in André, and we're obviously talking about a lot of the excitement and the opportunity that this kind of evolution is giving us. But one of the topics we are going to look at today are the risks and downsides for digital and internet-based companies, and indeed all participants in this area. And one of the big issues that we're seeing at we'll talk, how long has it been around? Let's see, ransomware. So André, just for those that, I think everyone's got a pretty basic idea of what we mean when we talk about ransomware, but perhaps you could talk for a bit about what is ransomware and how does it spread within a company when we have an attack?
Thanks, Kevin. Yeah, let me start by saying that ransomware is a common and very disruptive threat to any organization, from a doctor's office to a power plant, not just internet-based startups, right? So how does it work? And Lucas just touched on that. All of us have received emails with questionable links or attachment that somehow bypass our spam filter, our antivirus system, and end up in our inbox. And such phishing attacks are typically the entry point, as they contain malware that once executed or clicked on will start encrypting files on a victim's computer. And once that happens, hackers will gain access, use other tools to gain then lateral access across different parts of an organization's network, and implement ransomware more broadly, using other tools, and try to identify and delete any backups that they can find, right? So to prevent that company from any restore attempts. After that is complete, there's typically a ransom note that is displayed informing the victim that files have been encrypted, but that can be able to get them back if you're willing to pay a ransom to a crypto wallet. These ransom notes are typically hosted in the dark web, so they're very difficult to trace and to take down. And the crypto wallet in the ransom note is typically unique to each victim, so the attackers can track which victim has paid and therefore release the decryption keys to the right organization. Once the ransom payment is made, the hacker will often typically release the decryption key, allowing the IT organization to take back control of their IT systems. Even if ransom is paid, organizations have to analyze and rapidly prevent the root cause of that attack, because hackers will immediately after receiving the ransom try to use the same ransomware strain again against the organization, knowing that they're willing to pay, and therefore they're at high risk. So besides a solid data backup and restore strategy and regular penetration testing of the network and internet exposed assets, it's really key to run a very strong social engineering training and simulation to raise employee awareness, because that is often the entry point and the weakest link in our chain against ransomware.
Yeah, and I think, and just speaking from the lawyer's point of view, there's a couple of things really chime with me there. We talk about the context we're talking in the context of a ransomware incident here, and and how we can deal with that. And we'll talk in a bit, I think, about whether we can track ransomware, cyber criminals and people engaging in this kind of activity. But when we're involved in any sort of investigation, as much as we're trying to work out what's actually happened, a lot of it actually tends to be the other bit. Okay, well, why did it go wrong in the first place? And how can we stop it happening again? And I think we'll come on to that a bit more. But Luke, well, actually, I'll pause. I see Francis has joined us, so welcome, Francis. I'll bring you in a second when you get yourself off mute as well. But just I saw Luke was nodding along to Andre's answer there about ransomware. Luke, it's obviously not a ransomware incident, but someone who's had a bit of a scare this week himself. Looking at going back to ransomware, how serious do you think these ransomware issues are? Is this a big problem?
I do think it's a problem, and I ran a company called PALcapital. It was an e-commerce platform that processed billions of dollars, and we were level 1 PCI compliant, and we dealt with a lot of these type of issues. But one thing I want to maybe take a little bit of a contrary position than the panel here, is although I completely agree with André, it's very, very important. It's definitely an issue we need to solve. And this is part of kind of leveling up to protect companies against the ransomware. I also kind of want to remind the audience that though ransomware gets a lot of publicity in, the news stories go viral and everyone's like, oh no, this is so terrible. This one company, this one individual company got attacked for this amount of money. I want to remind people as well that there's literally trillions and trillions of dollars of theft that are happening every second of every minute of every day through the traditional legacy fiat system. Your store of value is being stolen from you by governments who can print money at will. And this is a topic that somehow doesn't make the news every single day as this $1 trillion theft. And so I do think that there's always going to be a cat and mouse game going on between the thieves and the security professionals that are hired and the lawyers that are hired to protect companies and deal with these situations as they happen. I don't think they're ever going to go away. But what I would like to see is equal airtime based on the proportion of value being stolen to these ransomware attacks that are terrible and horrific. And if you're the target of them, it's definitely a crisis to you. It's a national global crisis for your company, but also just what's happening every single day and the need to say there are risks with cryptocurrency. These are immutable transactions. They can't be reversed. You have to be very careful about your cybersecurity if you're going to do any type of business online. And at the same time, recognize that you're being stolen from right now. Literally, when you go to buy something, you have less purchasing power than you previously did. You just may not notice it as much. And so part of what I am passionate about is just helping educate people understand the realities of the global financial system and the value that cryptocurrency and blockchain can bring to them and their family, their business, and everyone they interact with.
I think that what was interesting about what André said is that while we're talking about technology and ransomware and crypto, et cetera, what he said was that most vulnerability has to do with human actions, not computers. And so I think to put what Luke just said in context, because I completely agree with Luke and I want my $1 trillion back, is that you need to set up systems and behavioral. It's almost like feng shui from the East. You need to set up the systems which will encourage people to do the right thing, to make the right decisions, so that you become hardened by your social interaction more than by your systems. You have to trust that your tech system is good and that you have a good tech guy who didn't make your password 1234. Right, but you also need to train people how to act so they understand, and then get it so that habitually they're doing things which make your organization or your person less vulnerable to being attacked.
Yeah, it's really refreshing, James, to hear you say that as an investor. It's one of the things that I think maybe people don't hear as much because it's the lawyers saying it. But one of the things that we always come back to when we talk, when we have it's the way we'd approach a ransomware incident, like any other kind of investigation, we'd look at obviously containing the problem and working out what's gone wrong. But so much of it then would be on the remedial side. Would be looking, okay, where did it go wrong and how can we stop this happening before? And so many times you see organizations and that have got fantastic policies and procedures in place. But a lot of the problem is that people just aren't trained in it often enough, or maybe there's kind of that annual training, right? And then the refresher, not the kind of ongoing dynamic training, which is tailored, say, to the different stakeholders in the business. So people need, and then also actually spotting it, even just spotting an incident. And maybe I'm talking more generally than just in ransomware, but you spot it. What do you do then? Like, who do you tell? How do you notify? How quickly does it go up the chain? Who else do we need to tell? So I think it's a really important point, and one that I don't think we can stress enough as certainly I can't as a privacy lawyer. But I think Francis sat there very patiently, so I think we'll welcome Francis in, and I think we'll come back to some of the points that we're discussing. But sure. Francis, I think we're very pleased to have an expert from Bloomberg such as yourself, and coming with the expertise you've got. I think if we can just maybe slightly broaden the discussion. Can you just give us a quick, overview of how you assess the Bitcoin and crypto situation in Hong Kong and perhaps Asia more generally? what does the market look like at the moment? I think we're going to have some changes, which maybe will come, we'll then link back to some of the points we've been discussing.
Sure. I think I want to first of all bring up the situation in Hong Kong. Hong Kong has been adopting the laissez-faire policy to cryptos and bitcoins for a long while since the emergence of this new token. But I think very recently, dating back in November, the regulator has been talking about more licensing and exchange access regulations for the browsers in Hong Kong. And currently, most of the Hong Kongese can still buy Bitcoins and other tokens via overseas over-the-counter and local exchanges. And some overseas and OTC exchanges accept wire fund transfers, while one local exchange now still takes cash deposits. That's according to the Bitcoin Association of Hong Kong. And we are very pleased to still have about 50 Bitcoin ETFs in the city. But I'm not sure whether that will still be the case when SFC and the financial regulator of Hong Kong trying to tighten rules on investor access to the tokens. I think most of these routes could potentially become inaccessible upon the enactment of new SFC rules. Retail investors may be left to gain exposure to cryptocurrency via products such as the closed-end fund, Grayscale, Bitcoin Trust, listed in the States, or Bitcoin Tracker One in Sweden, and some others in future. Other than that, other than direct exposure, obviously we have our very small basket of Bitcoin stocks listed in Hong Kong. We spot 4 of them, but I think any one of them are pretty small in size. Any one of them are still trading below $1 billion in market cap, which I don't think is a very good exposure if many of the Hong Kongese investors can invest in the US market, can access some better product like PALK or some other ETFs if they choose to have that indirect exposure. In terms of other parts of Asia, China has banned trading of cryptos domestically since 2017. Is not news, but you are also aware of the biggest spot and derivative exchanges in the world. 3 of them are still owned by Chinese founders, Huobi and OKT and some others. They are still owned by Chinese founders, and many Chinese are still taking the active part in the crypto market, either spot or derivative trading or other kinds of businesses. And if we talk about how the stock market is reflecting those, uptrends of either Bitcoin or other cryptocurrencies, price surges over the past year. I want to highlight that what I see in Japan and South Korea, I think both markets have like a dozen or so so-called Bitcoin-related stocks. They're doing really well. In Japan, I want to highlight Monex, which is generating about half of its revenue from crypto trading now. Also a security broker, maybe another one, SBI. It has a small part of its business doing crypto, but it's very actively promoting the application of Ripple. And those could be some of the points I want to bring to today's audience attention. Otherwise, I think Japanese yen and Korean won, according to Crypto Compare, are still among the top 5 currencies Bitcoins are trading into, and that's after dollars, euro, and some other global currencies. And obviously, other than Chinese, Japanese and Koreans, they are also very active in trading the new tokens, especially when we see the price potential since I think Bitcoin hit its recent bottom in mid-March 2020. So that's my sharing to now.
Kevin, I'd like to, Francis made a good point about China outlawing crypto, and there's been similar motions in India, which are 2 of the largest populations in the world, obviously. I want to point out something that I learned when I was in China in 1989, taking public the first company in China to list the New York Stock Exchange. And in the middle of the deal, the Chinese government decided they didn't like the deal, that they weren't being paid enough. And so they said IPOs are illegal. There'd never been one. And we were trying to do the first one with their support. And I read the South China Morning Post, IPOs are illegal. So the first thing we learned when I was over there is that when the Chinese government says something's illegal, buy it. because they're making it illegal for a reason. They're afraid of it, and they don't make announcements about things that they don't care about.
Yeah, I just want to jump in to remind everyone of something. Ant Group's IPO being suspended abruptly last November. I was also responsible for coming up with research on that company and any associating factors coming into the fintech sector of China. And we all know the politics played a very big part in Chinese securities market, investment markets. So it's not to anyone's surprise anything can be stopped abruptly. And cryptocurrencies will be among one of them. And another point I want to make is, the country is trying to push forward its own central bank digital currency, or what they call DCEP, or otherwise some other we call it digital yuan or yuan. That's the first, very likely to be the first CBDC to be circulated around the world, or if not around the world, at least in China. So cryptocurrencies such as Bitcoin, Ethereum, Ripple, Litecoins, you name it. I'm not sure how the Chinese government are viewing it, but obviously the government has banned its trading officially in 2017, and from this point onwards, maybe they don't even want that to be in Hong Kong or Macau. And OTC could be one of the OTC exchanges could be one of the routes. Chinese investors could still seek exposure to the investment or to the asset class. But to be frank, it will be more limited than like an open market, like what I see in Hong Kong before, which adopt a laissez-faire policy to this new asset class.
And Francis, it's one of the things that I take from what you said there. There's a lot going on. This is a fiercely competitive industry. There's so many options out there, and it's such a fast developing. All the underlying tech is so developing so quickly. We've seen this big surge over the last couple of years, 2 or 3 years, all kicked off with things like GDPR, real surge in privacy regulation, and you've already talked about the new SFC regs coming in here in Hong Kong. So there is movement on that front, but it always seems to me it's not really moving at the same kind of pace, or even in the same sphere. Because all privacy regulation always envisages kind of a traditional data protection framework, and that can be at odds and present challenges to cryptocurrency and the tech that sits underneath that. And that's not to say they can't coexist, but I think that's a discussion for another day. So it's obviously there's this kind of delta between privacy regulation on the one hand and what we're trying to do with cryptocurrency and the technology there. So for any of you, Francis, James, as an investor, is for companies, is spending money complying with privacy regulation now and investing in things like cybersecurity, is that a limitation, or is it a good investment? Is it the right thing to what should the priorities be?
If I could address one of your premises though before we get there, there's this concept that crypto and Bitcoin, are somehow illicit and hide information. The truth is, if you want to do an illegal transaction and you don't want to be traced, you should use US dollars. They're very hard to trace, and they move really well, right? If you want to know how value has moved around, put it on a blockchain and make it an open ledger, and you can see everything that happens. So I think you have to be careful when you talk about crypto and privacy, because the truth is, it's actually less private, but how you control it and how it's protected is more secure. So you're talking about a really interesting, give and take here. So I don't really equate crypto with privacy issues, right? To me, privacy issues have more to do with government and with education, right? So if you educate people how to protect their information and how it's being seen, if you teach people that if you go to Facebook and it's free, then you're the product and you're being monetized, okay? So in crypto, every transaction has a cost. Okay, they're defined in different ways, but every transaction has a cost. And the reason it has a cost is that you avoid spam and you enable the system to protect itself by having a barrier to frictionless transactions. So I just wanted to give that as a context about, about privacy.
Yeah, absolutely. And I don't think I just didn't explain my point clearly enough. I'm saying
I didn't mean to be.
No. I'm saying that it's good that you did it. When I said it's a discussion for another day, you've helpfully actually answered the question. So I'm sure lots of people out there would have had the same point. What I'm saying is, what I was saying is, you've got privacy, the direction that we've got the privacy regulation where we are at the moment, right? We've got something like GDPR and the kind of copies of that we're seeing at the moment. They're talking about we're talking about one controller, right? Whereas you're what we're saying here with blockchain, it's like, no, there are multiple controllers out there, right? So I'm saying it's kind of, that's where I'm saying that the tension arises. I absolutely agree with you. But yeah, so when you've got this kind of this kind of tension, if you like, is this the question was, is this a good place to be investing? Is it a difficult? Does this present difficulties?
That's interesting. Let's have someone else answer. I don't want to monopolize. Luke, come on.
Well, I'll certainly dive in. I think it's inevitably the future. I think that when you look at the network adoption of the internet, for example, and I can read some thoughts here from a friend of mine, Sean King. He has these life maxims and he talks about exponential growth, where if you hit the tipping point, which is just the third doubling from 1%, exponential growth patterns in technology and biology, they don't stop unless there's some other major force that acts against them. Basically, saturation is almost inevitable. And once the exponential process exceeds that 1% penetration or adoption, you're only 7 doublings away from 100%. And once it achieves 8%, the tipping point, you're only 4 doublings away. And the odds, again, of saturation are all but certain. So when I think about people talking about what is the future value of cryptocurrency? What's the future value of this blockchain digital ledger technology? And I was giving talks in 2013 saying it's going to be more disruptive and more valuable than the internet. Of course, this is not financial advice. I'm not telling people what to invest in. But I do know that when I read articles back then, Bitcoin was around $40 each. And I read an article by Rick Falkfinch, for example, and he said the target price isn't $100 for $50 to $100. It was actually $100,000 to $1 million. And he was the guy that made a $3 bet saying, I'm getting $100,000, 100% or 1,000% return in 5 to 7 years, meaning Bitcoin's going to go to $3,000. And he was exactly accurate on that prediction, which I thought was very interesting. And as I read his analysis of the global financial markets, it to me became inevitable. This is the best ledger ever invented. It's a mechanism for global nonviolent consensus. And it has some really amazing properties as money. And that money has always been a ledger throughout history. And so when I look at that, I see this and I say, this is really valuable. It's not going anywhere. And it's something that everyone should take seriously. And we're seeing that with Tesla and MicroStrategy and a lot of very serious companies saying, this is the future of financial value and we should be a part of it.
Yeah. And yeah, absolutely. This is clearly, this is, as you say, this is now part of the world, part of the, and I'm going to squeeze it in, part of the new normal, right? This is this is with us now. But André, just looking at it from, we're talking today about ransomware attacks and ransomware investigations as well. Remember, so André, just interested in your view here. Has the existence of crypto, has that fueled more ransomware attacks, or have ransomware attacks been around for a while? Has crypto made the situation worse?
Well, ransomware has been around for up to 30 years. I think that's what we would call the first occurrence. And interesting enough, it was in 1989. It was attacking the attendees of the World Health Organization conference in Stockholm. And if you think back to that time, it was distributed via floppy disk and demanded a payment to an offshore account in Panama. So it's been around for a while. That is nothing new. But what concerns the cybersecurity community is really that the criminal activity involving cryptocurrency has escalated immensely during a really short period of time, right? In just from 2019 to 2020, we have seen an over 300% increase worth of cryptocurrency paid by ransomware victims, reaching about 400 million. And that is a tiny small percentage of what we believe the true value is, because most of the victims are not reporting. The majority of the victims is not reporting the ransomware attack, often in fear of a plummeting share price or in fear of attracting simply other attackers, knowing that this company is prone to security issues and is willing to pay afterwards, right? So the real numbers is far in the billions. Another trend we've seen and watching carefully, which is concerning, is ransomware as a service, right? So in the older days, you really had to be technically very advanced to develop these the code bases that are able to bypass security systems using zero-day attacks and really be able to trick the systems in place. That is not the case anymore. If you're willing to get into that industry, you can simply rent the ransomware code base that is successfully tested from ransomware creators and can execute the ransomware attack yourself, and you will pay those creators a certain cut of your income of each successful attack. And what we're seeing then using that technology and that ransomware as a service approach, that then we've seen the attacks on critical industries dealing with the COVID-19 pandemic response just increase massively. Everything that's healthcare and government is under a huge attack at the moment. So yes, ransomware is here to stay. Ransomware has been around before cryptocurrencies, using offshore accounts in low risk or high risk jurisdictions, and ransomware attackers are using other coins and things like that to make life more difficult for law enforcement.
But yeah, exactly. How can law enforcement keep up? You know, can law enforcement track cyber criminals?
Yeah, the answer to that is twofold, and James mentioned that earlier, which I found an interesting point, right? So the ledger of Bitcoin especially is fully transparent and known. So in theory, yes, using blockchain analysis, law enforcement has the tools, especially in Bitcoin, to track ransom payments, right? The key to that is identifying criminal accumulation wallets, so wallets that are used by criminals to take those individual wallets that that individual victims are paid into and accumulate money into a few very large wallets to eventually cash out into real fiat currency. Law enforcement is using machine learning, AI, big data to analyze victim reports and identify code similarities, and executing sample seed payments to follow the train through the blockchain and identify where those accumulation wallets are and whom they belong to. But coming back to my previous answer, who prompts law enforcement, right? For law enforcement to get involved, you need a victim report, and that is still the exception and not the norm, right? And once you find those accumulation wallets, locating a cyber criminal still can be extremely difficult and involves legal challenges, given that those accumulation wallets are not in your typical country in the US, but they will be in high-risk jurisdictions without the KYC, so know your customer and anti-money laundering policies in place, and its successful prosecution of a cyber criminal is still a rare occurrence, even if paid in Bitcoin, right? And on the attacker side, it's a very fast-changing market, right? So once you identify that your ransomware strain as a creator has been successfully tracked and identified by law enforcement and antivirus providers, they will simply change the code base slightly, still using the same attack mechanism, and therefore escape the signature patterns used to track that strain. Furthermore, hackers respond very quickly to the transparency and the tracking possibilities of law enforcement in Bitcoin, and they've just simply switched to other digital currencies that offer increased anonymity, like Monero, Ethereum, or Zcash, and last but not least, they're using mixers where your ransom payments are just simply mixed with hundreds of thousands of other individual payments and then distributed to hundreds of thousands of other wallets, and then at the end of the day return some form of clean Bitcoin. So in summary, there is no coordinated response to ransomware attacks. Individual intelligence agencies are responding on an ad hoc basis, but on the opposite side, cyber insurance companies and firms very often just recommend to simply pay the ransom to the cyber criminal.
James, I could see you were chomping at the bit to jump in with a point there.
Yeah, I mean, from a practical perspective, when you pay the money, do the rent is the encoding released, or do you end up paying the money and having nothing happen? André?
In most cases, what is reported, right? You see that the decryption keys are provided, right? It's an industry, it's a business, it's not a scam at this point. You want to make sure that if you are paid, you get something back for it, right?
So
there is no guarantee. There is no guarantee, right? At the end of the day, you could be paying and not receiving the decryption keys. But in our experience, what we are seeing very often, the decryption keys are provided. Yeah.
So to me as a novice here, that all sounds some pretty scary stuff there. Luke, look to you. Should this scare us off? Is crypto too hard to use safely?
I think it's safe to say from a certain degree, crypto is too difficult for most people. Like I was saying earlier, we're kind of in that very, very early, 2.5% innovators, the type of people that can, type out SMTP commands to send email, that they would type in IP addresses instead of having a usability layer like HTTP, which provided this really nice user experience where you could type in a domain name, you could go to a search browser, you could interact with the internet via the World Wide Web. And so I think as an industry, we're kind of just now getting to that place. The internet was around for more than 10 years before the HTTP protocol came out. It was a bunch of different protocols, kind of like we have today, a bunch of different cryptocurrencies that have different user experiences, different crazy hashes with different letters and numbers to associate different cryptocurrencies with different addresses, and it's all very confusing. And again, if you make one mistake, it's the money's gone forever. There's no backup. There's no way to do a chargeback. If you send cryptocurrency to the wrong place, it's gone forever. And again, I think that what we need to do is, one, education, get people to level up, and that's a very difficult task. But two, we need to improve the actual technology and the systems that we use together. Unlike HTTP, we don't have a government-backed ICANN to kind of force a protocol that the whole world has to adopt. We have just ourselves. We have a bunch of independent companies, service providers, blockchains, cryptocurrency enthusiasts working together to make this all easier. And that's one of the reasons I'm very excited about the FIO protocol. We provide human readable addresses like Luke at Stokes, and you can do a decentralized payment request. So I can actually request funds from someone, and I can put in their contextual information, a memo about what the funds are for. These type of interactions, I'm hoping, will make cryptocurrency less scary, less confusing, and really kind of less dangerous for people who are like, oh man, I don't know what I'm doing. But back to my previous comment, I do think there is a leveling up that does have to happen, not just in cryptocurrency, but just to be part of the digital future. Understanding computer technology, understanding security, networks, and very importantly, as has been said many number of times, the real risk of social engineering. And that's where human beings can trick other human beings to do things that the security systems know you're not supposed to do, but if I give you my password, you can access my system, for example. So I think it's important that we level up, we improve the technology, and we help educate people on how to use these systems safely. And I think we will get there. Just like today, most people are comfortable using email, using the internet, and these are things that were just like super confusing. One of my favorite things to do to get a contextual understanding of where we are is to watch these old news interviews where they're like, what is internet? where is email? And they were so confused. And now it's just like, we don't even think about it. And I think it'll be the same with cryptocurrency because of things like the FIO protocol and other different usability layers that are coming to make it easier for everybody.
Yeah, I also want to jump in to make a reference to the situation in Asia. And I think, Kevin, you will be very aware of the situation that in this part of the world, middle-aged and old people, they're controlling most of the wealth. And if you ask many of them, they don't know what cryptocurrencies are. They don't know how it works for Bitcoins. Some of the old folks are still talking to me like, oh, how can you own a Bitcoin? Is it like a gold coin you buy and bring it back home? And the easiest way for them to access to this asset class nowadays will still be going to funds like Grayscale or Tracker One. Those will be the easiest way because they deal with securities brokerage account for their whole life. But to deal with that, whatever key you call it, I also got an account, but to be frank, I don't always use it. I'm afraid of losing that key too. and to be frank, I also try to have my mobile, the wallet, and try to have a physical wallet by myself. But to be frank, it's like, okay, don't bother if I just want to own it as an asset class in my portfolio, instead of really using it for payment and transaction, which still, I think is still a headache to do it. Although in some mega stores in Japan, if you learn from the news, they are already accepting Bitcoins as a payment means. But the price fluctuations, you don't know which price to mark. It takes a while for the transaction to go through. That's at least my own experience in using Bitcoin as a transaction method or means. So for Asians, especially Asian investors, most of them are still, pretty much a middle age or even of old age. They will still, go for the derivatives like the securities of funds in the market. Otherwise, for really payment usage, it will be quite limited, at least in the coming 5 years.
Well, I just want to make a quick comment about that. One of the things I want to remind people when they think about putting their funds with a third party is Executive Order 6102 in the United States in 1933. It was illegal to own gold. And so if you, for example, have your cryptocurrency with a custodian and your legal jurisdiction makes it illegal, they might confiscate that value. And these are things to keep in mind.
Yeah. Very good point.
Yeah, I think it's
Kevin, you may add something.
Yeah, no, I think it's a really interesting point. It's one of the things that you become, perhaps I was a little bit naive to when I first moved from the UK, when actually people don't, people tend, in the UK aren't really investing as a matter of course in securities. You talked first about securities, Francis, because, there is so many companies with retirement planning schemes early on. People don't need to invest. Whereas you come, one of the things I noticed coming to Hong Kong is that people are just very used to investing in securities because they need to. They need to do something. So it's really interesting that you've identified this as an area, Francis, and and Luke's talked about the need for awareness. So you've already talked about kind of a bit of the reform here in Hong Kong, Francis. Where how do you see this kind of this leveling up, this education? How do you see it manifesting itself? Will we see more regulation in Hong Kong, or will the market just have to develop itself and people learn through doing, or learn through actually learn through the companies teaching them? How do you see that happening?
Well, there are several angles I think I can share with a group of audience. Firstly, if you talk about cryptocurrencies as a payment means, I think it may still take quite a long time. Because if you take a look of the popularity of Alipay, WeChat Pay, which have been really proliferating in mainland China, you don't see too many using them in Hong Kong. We have our existing Octopus card, which is just a payment card thing or electronic card thing that has been in usage for 4 decades. And most of the people in Hong Kong, they got used to it and they dare not to change. As I mentioned earlier, in this city, most of the wealth are controlled by at least middle-aged people, if not really the old people. So that's one hurdle for cryptocurrency to flourish as a payment means. At least we see whether digital yuan or e-yuan can, go for that crusade first before we see more popularity for cryptocurrencies. But for cryptocurrency as an asset class, I think it gained a lot of popularity. You know, Chinese people they have always have an urge to invest their money. If you try to label it in a bad way, they like to gamble their money. So you know, different reasons, as Kevin has pointed out, in UK you may have a very good welfare system to safeguard your after, you know, your life after retirement. In Hong Kong, many people don't see it that way. We do have a low tax rate system in Hong Kong. We do have a higher disposable portion of our income to invest. In China, it will be the same. If you look at the Chinese stock market, it's quite crazy. 80 or 85% of the turnover contributed by retail investors. And if you look at the States, I think it's 70%, if I don't remember it wrong. So in Hong Kong, China, I think retail investments is really like a religion or you know, a practice for everyone. Out of, I think, 1 out of 3 adult population in Hong Kong, up to about 2.5 million of the people, they have their own stock brokerage account. So I think it's quite high, other than the normal retirement scheme. That would be individual brokerage account they hold in Hong Kong, according to Hong Kong exchanges. So the culture is here, but whether they would do it the right way or really to treasure the technical capability of cryptocurrencies, for instance, how blockchain can do for them or for their work life, or how the corporate in Hong Kong can really better utilize this technology, I doubt. But if you talk about using cryptocurrency as an asset class, everyone sees it as the new age of digital gold. Now, not too many in Hong Kong are saying, I want to buy gold to hedge inflation, this or that. They go for crypto. And many old folks over 70s asking me, how can I really buy that thing? They can't even tell me the name in pronounce it correctly. Some really funny phenomenon I witnessed in Hong Kong over the past few months of crypto flurry.
Yeah, thanks, Francis. That's interesting, and I think, and yeah. you mentioned China, and now we've got the distinction between cryptocurrency as currency and as an investment. You mentioned the yuan briefly earlier, and it is a very new idea. Do you want to just talk to us a bit about that? I'm pretty sure a lot of the audience will want to learn more about that. What stage is it, and when can we expect to see? See the yuan?
In fact, if you talk about e-yuan or digital yuan, that's a central bank-backed digital currency. And it's not only up to China. In fact, many other major economies in the world, they are studying the feasibility of having their own version of CBDC, or they have already put it through the consultation stage to the lawmakers. And it's not new at all, but China has been accelerating their pace of their own CBDC over the past year or so. As I said earlier, we call it the e-yuan or digital yuan. That's the easiest way to label it. So far, there has been tests in at least 10 cities in China, quite successful, with 10,000 merchants at least, and 500,000 people in each of the cities going through the test. I think technically there's nothing wrong with it, and I think it can go live pretty easily before the Winter Olympics in China in 2022. And the test will be expanding to another 28 cities, and more importantly, it will be expanded to Hong Kong and Macau. Those two cities are flying Chinese flag, but as every one of you may be aware of it, those two cities are in fact considered offshore from the mainland China administration. So the adoption of digital yuan in those two cities would really for testing its capability for cross-border payment. So from this point onwards, I would tell you, how Bloomberg Intelligence or our team has view why China want to do it or accelerate the pace of pushing this forward that quickly. We spot a few consideration agenda from the Chinese government. It could be macroeconomic or political considerations. And first of all, we think China want to use digital yuan to smooth their monetary policy transmission to contain the financial systemic risk. They think there's still a very big cash economy. And they also don't want to see the dominance of third-party payment systems like Alipay and WeChat Pay. So that's one reason we spot. The second reason, obviously, is for the policymakers to regain control over the money flow and consumption data of all the population in the country. So it's for the surveillance reason. The third reason, obviously, it would be for money laundering, anti-money laundering, but that I think is cliche. You know, every government is saying I'm doing anti-money laundering everywhere in the world. But if you look deeper into the geopolitical situation, we are also thinking about how China may apply the digital yuan as a way potentially to sidestep the dollar-dominated SWIFT system for the cross-border payments. It's one of the projects they have. They have another one called CIPS, which is a mirror system like SWIFT for banks to settle RMB directly with the People's Bank of China. But SWIFT is like predominantly the settlement system in the world for dollars, for euro, for yen. And to have this CBDC of China proliferate in other parts of the world, including its trading partners like RCEP in Southeast Asia, or one belt, one rule countries. Those could be what we think a way to sidestep the SWIFT system, which in our view, you know, somehow SWIFT has to listen to the states.
Yeah, well,
so
definitely.
yeah, I don't want to go into more details, but I think everyone knows the political implication of this you know, initiative. But I think you know, from this point, you know, digital yuan could be another tactics for China to promote the currency, their own currency in the international markets.
Yeah, I think it's definitely one to watch. Okay, we're into the home straight now. We've got about 5 minutes left. So what I think I might do is just go around each of the speakers, and everybody can have a minute to perhaps give the audience kind of one or two kind of headline takeaway points. So I think we'll finish with James, given he's the co-host. So make sure you leave him enough time. So I think, Luke, if we kick off with you, because you're top left in my screen.
Sure, happy to. Yeah, I think the takeaways are, don't ignore this technology. It would be like ignoring the internet and not realizing that it's going to disruptively change the entire world. You know, there is some leveling up that needs to be done, some education, some practice. You know, pay your dues in education by maybe losing some funds here and there and some small mistakes, just as part of learning, and also figure out what's going on in the technology space to help make it easier for you, because there is a lot of things happening, not just Fiat Protocol, but many other solutions out there to make crypto easier to use. So, you know, engage with it, learn it, figure it out, because the value that you have as an individual and your family and your business will be impacted by cryptocurrency and the blockchain.
Yeah, I think that's very reassuring. It's reassuring to hear. It's encouraging, and I think it is something we all need to look at more closely and not be scared of. André.
As I said earlier, the weakest link is the human in that chain. Regular social engineering, training, awareness campaigns, together with testing your technical infrastructure is really key to preventing ransomware attacks, together obviously with a solid backup strategy. But ransomware is not the only cyber attacks we're seeing on a daily basis. Data extraction and other things are obviously around to stay as well. So yeah, it's educating the employees and making sure that especially those phishing attacks are not the easy entry point into any organization.
James? Final word from you before we go to Andrea.
Sure. I think that the points that Andre and Luke brought up are right on. What I would just put everything into context. Ransomware is obviously a risk for your business, but if you looked at all the things that Francis has talked about and Andre's talked about, these are things which haven't changed over time. The idea that you need to be smart and protect yourself and create systems around you which tend towards security is just something which has been true since cavemen. Right. So I would just say, you got to be smart and understand the things you're doing in context. And to go back to Francis a little bit and talk about, China. Remember, in the late 1980s and 1990s, there were two currencies in China. There was FC for foreigners, and there was the yuan, the renminbi for local. So all we're seeing now is exactly the same thing over and over again. Now there's going to be yuan, which can be international, and renminbi, which is going to be local, right? So if you just put things in context, you understand that humans are what are the participants in these systems, and the humans don't really change over time.
Yeah, that's definitely right. Right, Andrea. Well, actually, before we throw back to Andrea, thank you very much to all of the panelists. I thought that was fantastic and really interesting. And I think we could have spent 2-3 hours talking about that and going into a lot more detail. But I think we've given everyone a lot to think about. And Andrea, we'll throw back to you to wrap up.
Yeah, no, Kevin, thanks to you actually for a great dynamic moderation. Let's be honest, it was not difficult because the topic is so interesting and the level of the panelists is so stellar that, you're playing with easy cards. But, to take it as you were saying, probably to be continued. I think what we have been doing today is definitely also education. I don't know if the 70-year-old man that Francis was referring to has clearer ideas now, but we are going in the direction. We are doing this also as privacy rules. I mean, we are present in 55 countries in the world now, and we are going to launch our, not cryptocurrency, but actually training facility to allow actually employees of companies to be aware of these and to try to address the human factor that all of you have mentioned. I think also there are so many different topics that should be elaborated even more. James was going in the direction of ethics of hackers. And, if you pay, are you really going to get the key? And so you see that there is something really interesting here. There is some level of honesty of those that actually attack your company and then eventually release when you pay. And they mentioned that sometimes this doesn't happen, but in most of the cases it does. Probably something also to mention, and Kevin, you were talking about spotting the attack. Sometimes the attack is already there since months, if not years. So you're totally controlled, monitored, and maybe the ransomware is just the tip of the iceberg. So again, what James was mentioning, trying to go towards security is a long path which requires constant scanning and using the best experts that you have available in the market. But anyway, this was really interesting. I think we accomplished something. We shed light on this important topic, and I definitely agree with you. Don't be scared. So familiarize with it, and it's a new revolution through the internet, like the internet possibly. So hopefully we will discuss this again in the context of the Digital Week Online with these experts and more. So thank you very much on behalf of Privacy Rules, and thanks to Digital Week Online and PALcapital as co-host for this day. Thanks a lot.
Thank you, guys.
Thank you so much.
Bye-bye.
Thanks, everyone.